But I will just give you a couple of highlights while I'm just waiting. Oh, hold on, there we go. Wait for the highlights. There we are. Right, so let me go into this and we'll get straight into the highlights then, because there were a lot of them last week. Last week was epic in terms of criteria changes. So we started off the week. We had 1,086 criteria changes, which was just unbelievable, absolutely fantastic. That was up 987 from the previous week, so that was phenomenal. And most of the lenders are now going back to physical valuations, although it's interesting because we are seeing a fair few lenders that are doing a hybrid of both physical and desktop valuations, but I'll come on to that a little bit later on. So most lenders, as you know now, I'm going to give you a bit of a list of these as well in another slide a little bit later on. So they've recommenced their physical valuations, and what that's meaning is that they're able to go back to the higher LTVs, and they're also able to go on to the things like buy-to-lets, HMOs, new builds, expat stuff, studio flats, and the multi-unit freehold blocks. There are a couple of lenders that have just held back on buy-to-lets just for now, but again, I'll come back onto that shortly. And criteria on furloughed workers, contract workers and self-employed that have also been updated and changed just a little bit last week. So moving straight on to the highlights then. So Santander increased loan sizes to £1 million on resi and 750,000 on buy-to-let. So we had Accord mortgages that reinstated lending on new build properties. So new build purchases, this is up to 85%. They're also doing the help to buy up to 75%, but that currently excludes Northern Ireland, but that is being looked at. So we do expect Northern Ireland to come back in pretty quickly. So they've also increased their LTV, so on 90% now, 90% LTV with Accord, you can get £500,000 maximum loan, 85% loan to value, and that is up to a maximum loan of £1 million, and 75% loan to value up to 1.5 million. So and they're also they've increased their purchase as of Friday that's just gone, so obviously available from today as well, increasing their LTV from 65% up to 75%, and that's on buy-to-let remortgages, and they're also lending 75% loan to value again on purchases on buy-to-let. So Clydesdale and Virgin Money, obviously these two go hand in hand now, and they're returning to 90% LTV on residential and 80% LTV. Actually, that says next week. This was written last week, so actually it's from this week, I believe. So you should be able to see those products start coming through on the systems as of today. Skips and intermediaries, they're now accepting help to buy applications up to 75% loan to value, and help to buy 75% loan to value, and just normal new builds as well, which is fantastic. So other lenders, looking a few of them a little bit more specialist. So we have a Platform, they've relaunched their mainstream and buy-to-let ranges. So they've got a maximum £1 million loan on residential and 750,000 on buy-to-let. They are also, they've brought the product switching back in as well. That came in on Wednesday last week, I think that was. So Foundation home loans, they're now lending up to £1 million at 75% loan to value, and 1.5 million at 60% loan to value. That's on residential, buy-to-let and HMOs as well. Hampshire Trust Bank have increased their LTV to 75%, which is great. And then Ipswich Building Society, they resume lending across all types: residential, buy-to-let, later life, expats, self-build, holiday lets, the lot. So that's fantastic. And they have confirmed their stance on furloughed workers. So what they're saying is that they will now accept 80% of furloughed workers' salary up to the £2,500 a month for affordability, but they need to see evidence of entitlement. They aren't accepting the top up though, so it is just the 80%. So for a furloughed worker, even if their employer is topping that back up to 100%, then they're not accepting that at Ipswich. The Melton Building Society, they've increased income multiples and loan sizes, so that's good to see. They're back up to £1 million and 75% loan to value. Their income multiple is so it's 5 times single or joint income. The help to buy remains capped at 4.5 income, in line with obviously the scheme rules. So then we've got Leak Building Society have reinstated lending on flats and on new build properties. Seen quite a lot of these come back on flats and new builds, which is great. And then Zephyr Home Loans, they've resumed lending on buy-to-lets up to 60% loan to value, with a maximum loan amount of £1 million. Interbay Commercial, they've reinstated lending on HMOs. They've now got a max loan of £3 million with a max LTV of 75%. So that's great. That was quite a big increase as well from Interbay. So they went up from £700,000 up to £300,000. So that was fantastic. Some real tolerance in there. Kent Reliance have reinstated lending on HMOs and UFBs, and the LTVs increased to 75% on both residential and on buy-to-let. And Precise Mortgages reintroduced lending on Help to Buy for purchasers, plus new build and studio flats. So now at 75% LTV on both resi and buy-to-let, but that's just on first charges. So that doesn't include the second charges. The 75% as well also does, so it's the 75% plus lender fees as well. So again, just a little bit of tolerance in there if you're wanting to add the lender's fees, the product fee to the loan as well. The mortgage lender TML, they've resumed lending, so they're now lending on HMOs and MUFBs. That's again on the back of physical valuations coming in. And the Nottingham have relaunched 80% LTV products for residential purchase and remortgage. So they are, they're looking at buy-to-lets. They're another lender that we expect us to follow shortly with regards to buy-to-lets. Now, I'm just going to share this screen with you. So this is a screen of the lenders that reinstated physical valuations in the last week. So as you can see, it's pretty comprehensive. It's interesting. So quite a lot of the lenders have actually said that they're going to do a bit of a dual track. So we had people last week, I think, well, the Halifax, or all Lloyds Banking Group lenders actually. So Halifax, Scottish Widows, and BM, they're doing, so they're going to continue with the desktop valuations basically, because they've obviously found that that's they're getting through them quite quickly. And also as well, from a social distancing perspective, if they don't need to send somebody into to a home to do a physical val, they're not going to do, which is responsible. And we see a lot of lenders announce that they were going to do that as well. Aldermore, they're another one, so they've reinstated lending on residential thanks to physical valuations, and again they expect buy-to-lets will follow soon on the back of that as well. Keystone Property Finance, they expect to be able to do them within 20 working days. That's the only one just to be aware of, because that's quite a decent lead time on there, but it said it could be longer on depending on the lending type, so just to be aware of that. So good news story. So we've got Scotland looking to lift their lockdown restrictions slightly. But Nicola Sturgeon did say last week that the estate agents must wait to open. They're expecting sort of possibly 18th of June for Scotland to move into the first stage of releasing their lockdown. So 18th of June does look like a key date for them. Obviously we're going to keep our eye on that, because what we'll see is lenders opening lending back up in Scotland, as we've seen in England in the last week. So we do expect to see more announcements on that, hopefully this week, probably next week to be realistic. So quite a lot going on around there, but it's all about the market opening back up this week, which is fantastic. So on that, I'm going to hand over to Jo now, and he will give you some news from the other side of the specialist market. So Jo, over to you.
Thank you very much. I mean, as we indicated last week, we thought there'd be a load of changes, a sea of change last week, and definitely that was felt. And I think appetite on the front end for deals we previously haven't been able to place certainly changed last week as well. So I'm going to go through a few more new deals this week than I normally do, because I just think that there's some right variety in there for the first time really since lockdown began, and I think it's really important that you all understand where the market's at. Going to lead in with the One Savings Bank, and particularly precise. We had a 400k HMO remortgage agreed at 75% LTV last week following the new changes. 24k rent. That came back to us on a 5-year fix at 399. Again, the fee was added on top. Absolutely amazing. Commercial investment, we had a £2.5 million commercial investment unit in Manchester agreed by Shawbrook Bank. That was at 70%, at a rate of 6.16 on interest only. So again, that was fabulous, seeing not just the fact that it was a large single asset, but a large loan as well, agreed by Shawbrook Bank. So those guys have done really, really well on that sector and supporting landlords who continue to see commercial opportunities out in the marketplace. And I think an interesting one, continuing the Scottish theme, we had a bridge agreed at 75% in Scotland for a residential refurb property. That was done by Lendinvest. Again, really attractive rate, sub 0.8% a month. So well done to the guys there on smashing that out and carving their own little niches in those markets. It's really great for us here as master brokers. Completion of the week goes to Masthaven Bank. They completed a bit of a debt con deal. So client came to us, was looking at rolling up some adverse credit, some further unsecured credit, which was costing about 24% per annum. Quite a few credit cards involved in that. We don't normally like mixing debt con into bridging, but in this particular circumstance, he was looking at selling one of his investment properties. COVID-19 had obviously meant that the lead time perhaps on sale wasn't where he'd originally envisaged it before when he put it on in February. Masthaven Bank and their underwriters there were able to take a bit of a commercial view, understand the customer's needs, understand that actually even with the bridging finance, the client was making considerable savings on a monthly basis, and we did that at 0.68% a month for a 12-month roll period. So absolutely over the moon with Masthaven there, pulling that out of the bag and helping a customer keep the wolves from his door during turbulent times. So big shout out to those guys. I think as well, hero lender for me for this week has got to be One Savings Bank. Although we've not seen them come back into the seconds and bridging space yet, and we particularly in the bridging space, I think it might be a bit of time before we do so. I think if you look in their criteria, the new build sector, and look at how they're still keen to support self-employed individuals, I think there's a great opportunity for you brokers out there, within that new build sector for self-employed customers. Similarly, buy-to-lets, HMOs, you read all the data out there. It looks like student lets could be taking a bit of a bashing with online courses for the next 12 months. And the OSB guys are still hungry to look at the HMO market. I think that's a real opportunity for you guys out there. As long as it's not affordable housing type tenants, they're a great out. And 75% on Remos, huge. So OSB get my lender of the week. It was really tough last week because we had so many changes. And again, I'm really excited to see how the new deals acceptance rate increases and what niches I can give you guys next week, and hopefully with it being month end, we'll have a few more specialist completions that we can update you on with beginning next week. And that's me.
Brilliant. That was it was a busy week last week, wasn't it? It was
huge.
Just I know as we were doing our daily email update every evening, and it was just the amount of change that was coming through on the physical valuations. It really does feel like things are getting back to normal, which is great, and I think we're going to see that even more so, certainly throughout Scotland, Wales and Northern Ireland to follow as well, but it does. And then obviously with the news last night, the further news about phase 2 of releasing the lockdown, it really does feel like a new normal, but back to normal at the very least. I wonder if there's any questions for us. Anybody has? People had lots of questions last week, but
loads.
We might have stunned them into silence this week, Jo. I think we've
they're still writing the notes, Nick, with all the criteria changes.
Trying to keep up. I know that is the thing. It's with the number of changes that we saw last week, so well over 1,000. It's just that's why we cherry pick the ones that are they're the most prominent, typically around LTVs increasing. I've seen a little bit today around looking to see if we can get the remortgage LTVs increasing as well, which I think we'll see. I think naturally will follow. One of the things I've been really pleased to see is that lenders, once physical valuations have resumed, lenders have put their LTVs back up, and not as cautiously as you might have expected. You know, with the talk of the property market, everybody's quoting percentages that they think the property market might dip by. So I'm really pleased that they've gone straight in with putting their LTVs up, and they've not sort of erred on the side of caution. They really are back open for lending and at those higher LTVs as well. So I think that's really encouraging. Very much.
I agree. It's just, you know, we've all got to get our heads around income, haven't we, and what the ramifications are on that side. I think there's definite demand for purchase out there. We've been inundated with purchase transactions below market value, and also a lot of unencumbered property cap raises, so people can go out and acquire during these times. So that's quite an interesting area. We've all got to get our heads around income and what that means. You know, self-employed people, I hope they don't become the kicking post of the industry. You know, it seems to me, again, the primer lenders don't have a particularly great appetite for self-employed individuals currently, and again, that's why I went with OSB on that point, because I think that they seem to be backing the self-employed customers of yours, which are amazing. Yeah,
and that's it. It's how they're going to look at that. We did hear one thing that was quite interesting last week. I actually did a blog on LinkedIn about this. We did hear that from the FCA, so they are looking to extend the mortgage holiday scheme, and that should be confirmed probably tomorrow, Thursday, I would have thought. But one of the interesting points about that was that for the first time, the FCA actually mentioned that payment holidays could affect their ability to borrow. Now, they've not said that before, and of course what we do know is that they're not reporting it into the credit referencing agencies. However, you don't need a credit reference agency to spot that a payment holiday is being taken. So, of course, send in your bank statements, but even more so now with lenders using open banking, then they've got the ability to see who's taken mortgage holidays without using the credit reference agencies for that. So that is something that we're just keeping an eye on. Yeah. And one of the things that I suggested in the blog is perhaps lenders should look at that with self-employed people and look a little bit more favourably at them if they've either not taken a payment holiday, or if they just took the initial 3 months while the country was in lockdown, but then straight away went back. They didn't request the additional payment holiday. That's perhaps one way that lenders can look to differentiate the way that they treat self-employed people, because with self-employed, one size does not fit all at all. So perhaps they can use that payment holiday information as a bit of a force for good and look and say, well, look, if they were self-employed and they didn't take a payment holiday, that speaks volumes, doesn't it? So I don't know. That was just my sort of musings on in, but I just hope, you know, lenders may get with that program and look at that as a way to assess it, and, you know, possibly.
No, you're right, and look, they're definitely asking it day one. They're definitely asking, you know, not even just on the subject property. They're asking about payment holidays on any property in portfolios. So, you know, it's definitely something that they're picking up on. But I still think, you know, there should be a counter argument. If the customer's had impeccable credit, pre these exceptional circumstances, you know, lenders should find a common sense approach to supporting these guys, you know, for me, really.
Yeah. Well, let's hope we see that. I don't think we've got any questions this week.
No. Yeah.
Our musings, really. But
Job done.
So yeah, definitely. So if nobody's got any questions, should we wrap up for this week? And we're back again on Monday next week. So no bank holiday, unfortunately. So yeah, we're back on Monday, and obviously. We're available through the week. We're sending our daily emails out from Knowledge Bank, and then we'll see everybody again next week.
Amazing. Thanks, Nick.
Thanks, Jo. Good to speak to you.
Cheers. Bye, guys.
Bye.